Hello and welcome to this weekend investing market update for 20th of March. We are still in the throes of this banking crisis that is happening worldwide, and significant events have happened over this weekend. UBS, the largest banking group of Switzerland, has taken over Credit Suisse, the second largest group, and for pennies on the dollar. So we are going to show some charts in today's video and see what is the long term lessons we can draw from such huge events that are happening in front of us. But first, a look at the markets. Nifty again went to a new low, recent low of nearly 16,830 or 40, but it has again come back to 16,988 by the end. So you can see here that long legged candles are getting formed on a daily basis, and whenever that forms, you can see here also, you can see something here also, at least in some intermediate low seems to be being put in place. So we could look at some relief rally that may come around. The heat map is very evident of what is happening in the market. IT stocks beaten down, banking and finance beaten down, energy, autos, steel, cement, commodities, consumption stocks, even FMCG, everything is down virtually. I mean, no sector has been spared in this market. This is the mid cap index. Again, the mid cap index is trying to stay very close to 30,000 mark. It has not really broken down as such. Small cap also is kind of sticking around this 8,800 mark, although it is slipping more than the mid cap index here. So 6 7 8 sessions on the down. Market is very oversold. There is no confidence for people to buy, and that usually is a good place for stock pickers. Of course, momentum strategies will take time when the momentum comes back to ride on and to add on new constituents. But for other strategies, these are golden days for value and stock picking. Nifty Bank is showing slightly better formation than Nifty and mid and small cap index, where again you can see recovery at the level of, at least on a daily basis, the market recovers after falling down. So there is support that is coming in these indices. Overall, FMCG still managed to clock a 0.8% gain today. Everything else was negative, with PSU banks, metals, IT, real estate, and auto losing the most. Uh, Over a week, month, and 3 months, mostly everything is still quite negative. We will need the switch from this despondency in the global banking situation to turn this ship around. And we are essentially looking at history being made every day, where one bank is failing, another one comes and takes its assets on its books, and then another one is ready to go bust. So governments are bailing out smaller banks by not trying to create panic, by not trying to have any illiquidity in the system. So enormous amount of money is being thrown at this problem, but there will not be enough. That is the issue, and that is something that we will need to deal with in the coming days. In terms of performance metrics, there is nothing really to show today. Everything is down 1 to 2%. MI20, MI50 down here in mid and small cap strategies. Small cap strategies, MI25 and MI35 is down. ATH2 escaped today at 0%. MI all cap is down minus 5.5%, and MI30 is down 1%. In large and mid cap strategies, NG5050 on the back of gold doing well has done all right. MI Evergreen, despite the gold hedge, is slightly better than the benchmark. NNF10 and MI India Top 10 also bleeding. in today's downfall. So spotlight for the day is again the the Swiss banks, the Credit Suisse group, and this is a a 27-year chart of Credit Suisse. So what I want to sort of elaborate here is that there is nothing which can be said to in today's world to be too big to fail. Now, number two institution of uh, this Credit Suisse, the globally renowned bank, huge assets, but has been sold for 2 or 3 billion dollars because the liabilities that they have accumulated over the decades and the leverage that they are playing on did not leave anything for the equity to change hands at. In even about $17 billion worth of 80 bonds have been nullified. So this is a contagion that is tough to control. You know, yes, the bank has been taken over by UBS, and the Swiss government has said that we will, backstop this for up to $10 billion of loss. But a lot of institutions, lot of pension funds, lot of hedge funds would be holding their paper, which has gone bust, and they themselves will now, will have to scamper to make good of that hole that has come into their books. So I think it will be very difficult to control this contagion. The governments have tried to open swap lines between various countries to make sure that there is no liquidity issue, but I think this is not the end of the matter, and very evidently, it is being shown, or the gold is reflecting this uncertainty. Gold topped more than $2,000 in dollar terms and more than 60,000 in INR terms. So that is clearly giving an indication what kind of uncertainty the market is living in. So this is basically, this chart is like decades of underperformance and virtually no performance, especially since 2008. In 2008, Credit Suisse was $80. Today it has been sold for 25 cents or something like that. So the crazy amount of loss that has happened, 99% or more value has been lost in the last 15 years for a market leading institution like this. So nothing is sacrosanct in the world, you can say. I mean, we can live in our own world and say that we hold this XYZ stock and nothing can go wrong in it. But just look at this. The examples are there in front of you that no stock, no institution can be said that nothing can go wrong in it. And you are seeing my pet Hazel behind me. So Hazel is accompanying me on this video. UBS is the group which is which has been forced to take over Credit Suisse. I mean, it's something like the State Bank takeover of Yes Bank, where the government put a gun to State Bank's head and said that, buy Yes Bank, whatever is left of it. The same thing is happening in UBS. Now, UBS itself is down from $80 in 2008 to recently $20 and even $8. So 90% value here also has evaporated since the last 15 years. And nothing has been given to shareholders except maybe some dividends may have been coming since the last 25 years. There is no capital appreciation at all. And now this institution has been saddled with, this mammoth second domino that has fallen down. And who is to say that, UBS cannot fail? I mean, Swiss government has backed up UBS, but what happens if UBS fails? What happens if there is a contagion effect to the rest of the global banks? So I think the last, uh, we have not seen the last of this problem. I am hoping that solutions can come out, but that's hope against hope, because uh, when such contagions start, and we saw that in 2008, we saw that in 2020 also, it's a bit difficult to stop them, until certain things change. So I think a rocket of a announcement by central banks put together all over the world maybe on 22nd when Fed meets is required, that a concentrated effort is being made to save the market. Otherwise we may get more shocks. This is my sort of sense. So with this somber note, I will end this market update. I hope to bring better news to you on a daily basis, but this is where we are today. So thank you so much for watching, and goodbye.